Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, February 18th, 2020. It's exactly quarter to 12 Eastern Time as I'm starting this video. This video will be for subscribers. Let you guys know, as I mentioned this morning, I had a dentist appointment today. So I'm back now in the office, and I'll try to get back to any questions, going back from last week or today as soon as possible. Let me get my bearings here on everything, which I've started to do. I just wanted to do an update video, mostly a follow-up to the things that I highlighted today. Again, those are the charts I'm watching. It's not by any means all-inclusive, and I didn't include individual stocks, but I did cover the indexes, sectors, commodities, precious metals, things like that I'm watching, and where I think the trading ops are now. Now, I'll always start out with I shouldn't say always, but I'll usually include an update of the broad markets because that's just, again, what we do. That's the general tide, as far as equities go. In an uptrend, most ships are lifted with a rising tide, and in a downtrend, the opposite holds true. And so let's talk about that real quick. I gave you the charts of the futures this morning, and one reason I wanted to do a follow-up video, I know a lot of you guys out there, guys and gals, will trade the index ETF. So here's SPY. Really not much new to report since last week. If you recall, we had a breakdown, this bearish rising wedge. We're on a 60-minute time frame. If I forget to mention, it's usually up here. SPY hourly chart, so every candle is 1 hour. So we had a breakdown. We back tested last week, and we're rolling over today. So at least at this point in time, the technicals are playing out, meaning that we had, just like back here, divergent high. You had a breakdown back test there. You had a correction followed by a divergent low. These are the things. They're not absolutely necessary or mandatory to see a trend change, but that's it's a pretty simple and effective way to kind of catch the ebbs and flows. And remember, 60-minute chart means smaller time frame. So this, you're looking at these wedges. You don't look for a move of 10-20%. You're looking for, on this shorter term time frame, swing trades that can last usually a few days to a few weeks. That's usually how I'd say the 60-minute time frame helps you trade. So there's a drop, right there, about a 7-day drop, or a week or so, and down about almost 4%. Then the rally right there. And again, so here's where we're at now. Sell signal has been triggered. We're moving lower. Nothing impulsive or exciting yet. A little bit of resist or support here. Let me add a line to this chart. I haven't updated that since Friday. And what I'll do is show you, why I add the lines, what I see. I see a gap right there, number one. You want to look for gaps when you're drawing support and resistance levels, because they often, very often, act as support and resistance, meaning once you get a gap, then the top of the gap is resistance. Boom, boom, failure. So, one could have shorted there at the top of the gap, closed out longs. Again, an active trader. Longer term trader, investor. This is not your 401k. You're not going to manage around the 60-minute charts. This is swing trading, active swing trading stuff. So there's another gap right here. And what happened? We went up, and then boom, we tested the top of the gap, which was support, and boom, led to the next leg up. So I just wanted to say that's what I see here. I see a gap right there. It was back tested right there, top of the gap. Top of the gap test again. That's where we're at now. And the way it works is you don't always hold support. Sometimes you do. And as I like to say, support is support until and unless broken. But part of my job is to tell you what I think is going to happen based on what the charts are saying. So I use what's on, over here on the left side of the chart to predict what's going to happen here on the right side of the chart. Hence the name of the site. So based on this right here, I expect this gap to be entered, which it's starting to do now as I'm doing the video, and backfilled at the very least, meaning a move down here. Technically, the top of the gap is at the top of this candlestick here from February 10th right there, but I see some a little bit better, more reactions, more support right there around 334.16. But also based on the scope of this pattern, it would project more downside to come. And you can see all potential targets. Right now, if you wanted to know probably what the sweet spot will be, especially if we can get some traction to the downside, because remember, we've had a lot of sell signals in this market lately. Some have paid out for these 3-4% pullbacks, and some have just had a very minor pullback in the next leg up. The technical analysis doesn't just completely stop working. There are times in a strong uptrend that bearish chart patterns and developments play out for very little of a move in the opposite direction. In other words, very small corrections. But then ultimately, things like that do play out. So if you want to know where I think we'll probably head this time around, I would say at least right here, and ideally here. And this is, I can tell you from looking at this chart, if I zoom out a little bit, here's my what I call if things get ugly target. And not super ugly, but just ugly compared to what they've done lately. And that is, let me give you that level there. Turn that line up a little brighter. And that's about 322.50. We'll round it off just to, people like round numbers there. So 320.50 or so on SPY, which would constitute a drop of about 4.5%. And again, to get there, it works this way. You take out one support level. Once that's broken, it then opens the door for a move down to the next support. If that breaks, opens the door down there. So again, this is, this pattern. The measured target would only project down somewhere probably about right here, but again, we might have a little bit more than that. And when I say measured target, take the widest part of a wedge, which I just did here, add that to where the wedge breaks down, and that gives your measured target. But sometimes you'll exceed those. So anyways, that's what we're looking at on SPY. PPO is still in bullish territory, meaning it's up above this zero line right here. When it's above, the trend is bullish, and when it's below, the trend is bearish. So there's still work to be done here on the downside, and that's something to look for. So if we break these supports, do you see this the 9 EMA, that white line cross down below there? And if so, that does open the door potentially for a deeper correction. So let's see where things go. I don't think it's time to be aggressively short because, again, the nature of the trend, it's been so strong. Resilient pullbacks have been relatively minor, but depending on your trading style, where you think things are going, the longer the markets kind of defy the technicals, the more overbought they become, the greater the risk is for those sharp corrections that nobody sees coming, because you have a one-sided trade. The shorts have left the building, they've been blown out, they've covered. Longs have become emboldened and complacent, and you get a crowded trade, and then everybody's long, and there's no one left to buy, and a lot of people left to sell, at least in the near term, and that's how things work. And people are scratching their heads because they can't understand, where sometimes these big drops, like we had in late 2018, come from. So that's it. I don't, who knows? Let's just take things first, step by step here. So zooming into QQQ. Charts, having a little quirkiness going on here. Okay, so looking at QQQ, this level right here, and I believe this line would have been up there last week. If not, doesn't matter, it's there now. 233.67. You can see as I zoom in nice and tight. It's not a huge support level, but it's a decent support level here on the 60-minute chart. You had a reaction high there, another one there. We popped above it a little bit, couldn't hold it, kind of flirted through there, but for the most part, you can see it has been holding or capping the pullback in QQQ pretty much all day, and including Friday as well. This is where we opened here. So we broke down. So the story is a bigger picture, is breakdown, back test of the wedge, moving sideways. You can see SPY starting to drift lower in the tech-heavy QQQ. Everybody loves Apple, even though they, came out and said, coronavirus is going to impact our revenues. That was the news. It took the futures down a little bit today. Nothing big, but again, we'll see. The FANG stocks continue to hold this market up. People want to own those big tech companies. However, when they break, it works both ways. Money comes out of those stocks. It's going to affect the indexes, and so keep it very simple. Look for a solid. This was a whipsaw signal. Sometimes you get those, but you want to see a solid impulsive break and or a 60-minute close, well below this level, that 233.67. If so, that opens the door up for this target, that first target. It's not very, it's not very deep. If you're an NQ trader, which are the futures, you'd make probably $1,500, $1,800 or more, maybe $2,000 on just short trade. That drop right there from there to there in the Qs. That's about 1.5% drop, and as I think I've maintained for about the last 2 weeks here or so, this is my preferred target right here on QQQ. You have the 224.70 resistance level, big old gap right there, or I should say support level. When it's below, it's a support level, and the trend line that comes all the way back here from the October 3rd lows. So that is my preferred target. That would be, if hit, a drop from where we're at now. I might have grabbed a little high there, but give or take about 4% drop. in QQQ. So that's that. And IWM, yep, I know there are some of you that trade the small caps. I did an update or included this one last week. Bearish rising wedge pattern breakdown. First target's hit now. That was that level covered. Should have been covered last week. 166.74. We are at support. So the way it works is we either bounce here, but I do expect that support level to go more downside. There's, you can see the next two targets down there, and it's kind of a wash, rinse, repeat thing. You look for these wedges, you look for divergent highs. There's your negative divergence right there. Your bearish rising wedge breakdown correction. We pushed up, made a marginal new high, still a divergent high. You had a trend line to use as a sell signal when broken. Boom, the next correction. And here we are again, wash, rinse, repeat. So that's where IWM's probably headed. And it would certainly help to see QQQ and SPY hit those targets. And that's also about a 4% drop. So there's your numbers. We're talking about 4 or 5% pullback likely in the markets. Trade it as you will. I'm not sure. I know I haven't added an active short trade on the indexes since well into last year. It's been almost a year now, probably maybe a little less than a year. But like I said, that's like it or not, I like the trade, and it's more of a. I typically don't on indexes try to shoot for 5% pullbacks, 5% trades. Try to go for the longer term swing trades that you can position for several weeks to months. But again, it certainly has the potential to morph into more when I look at the longer term charts. But let's just take it day by day right now, and those are your near-term targets. Now let's look at a few other things. Follow up on the charts I'm watching today. I'm going to pull that up on another monitor right now as we speak. All right, so I covered the indexes first, then I covered gold. So let me go, since I covered gold futures this morning, let's start with GLD. As I told you guys last week, there were some levels to watch. This is what the GLD 60-minute chart looks like right here. And here's what it looks like on the daily chart. So this helps support the case that gold's in a bull market. It took this little divergent high. Remember, covered this last week. We had this little rising wedge pattern, not little, pretty decent rising wedge pattern. Gold broke down, gap down the second day, but that's it. Boom, they ramped it up. So this is kind of indicative of what the stock market's been doing for months now, for many months, because it's been in a strong bull market, and I think gold's in a bull market too. And so what tends to happen, not always, but it tends to happen this way in a bull market. Bearish chart patterns, they do break down and trigger a short trade or pullback. It's very minor and usually less than even the measured target. And again, the measured target of that wedge would be the widest part of the wedge. Add that to the bottom or where it broke down, and you can see we reversed a little shy. So there is still divergence intact. That's something to note. But as I mentioned, in a bull market, just like the stock market has done on some time frames, it can take those divergences out if it keeps going up. So I like gold, especially I like it even better as it gave us that buy signal I was looking for last week. In last week's video, I just toggled over back to that 60-minute chart I posted this morning. The level to watch was about 1580, just over that. It was resistance, support there, resistance there, and boom, we broke out, back tested. So you had about 2 opportunities to get into gold, and then boom, nice leg up. These are gold futures up 1.32%. Nothing exciting, but it's at least this is where some of my money is right now. And I think again, near-term opportunities and potential long-term, as I said before. Long-term investors, you can buy on pullbacks to supports or breakouts, or just kind of average in. I just think gold and the precious metals continue to make sense as a piece of the pie for asset allocation. Don't put all your money into gold. Don't put all your money in any one thing. That's just not proper, prudent, financial advice or strategy, because you're either going to be very happy or very unhappy if whatever you put your money in goes against you. So I believe in diversifying among both individual stocks, different sectors, and asset classes. In this case, gold, cover silver. Well, let's back up and just go to that chart on silver futures, because we had breakouts across the board on the precious metals since that last update, I think on Friday. Where's my silver chart? Here it is, right here, SI. There it is. I mean, that's a nice move, and I mentioned last week that I preferred silver over gold. I thought you get more bang for your buck then gold, and it has, I believe it's outperformed. I'll measure it for you here in a second. So there's the breakout right there. Beautiful breakout. Back test gave you 2 opportunities to get in. Ran up to my first target here, 17,821. Got checked off that level, had a pullback, and then broke out and back tested this morning. That's where the update was. And just then, problem with this, if I measure here, click and measure. So I'm going to measure from the breakout point because it will drag the trend line. So that's been about a, what is that? 3%, almost 3%, 2.83% rally so far in silver just the last couple of days. This is active trading. Now where we're at, I wanted to point this out. We're just a hair above that target right there, that 18,115 level. So what you can see, that was the resistance there, reaction high, gap right there. Tried to back test from below and it failed. So I'm seeing a lot of reactions. A good level. I favor a reaction here. That means a consolidation and or pullback. If the market took a sharp leg down later today or tomorrow, that would be it should give a tailwind. In other words, help out silver. But if the market can hold up relatively well, you might see a flight to safety bid coupled with the fact it's run into resistance. Yes, a hair above it now, but again, when you have, this is a vertical pop right here. Since I did the update this morning, it's almost straight up, and you often get what I call a momentum fueled overshoot. When you have a lot of velocity or momentum coming into a resistance level, you tend to briefly overshoot it and then come on back down through. So I can only tell you what I did. Right before the video, I took profits on my silver, and I plan to recycle back in. Whether we just consolidate there and then break out, we get a pullback. If I have to chase it, buy back in at higher levels, depending on what happens, I'll quite likely do that. I'll just have to assess the charts as I go. But as of now, I'd prefer to get a little bit of a pullback, consolidation. If it came all the way back here to test 17,821 again, which it's possible. Depends what the market does, and that might be an objective entry point. We'll just have to see at the time. Another thing I can do here is add a trend line. This is probably where we'll pull back to, would be my guess here, especially if the market has holds up a little and then takes another leg down. Pull back like that, get in there, and then maybe recycle back up for another leg up. So silver looks good. And then the other one I mentioned last week was platinum. Palladium has been moving up, but I'm more interested in waiting and putting if I see a long entry, I'll do that too. But I'm looking for eventually a nice swing short or trend short position on that once palladium is topped, and that's probably, but not necessarily, going to have to coincide with the stock market topping, because palladium is traded in line a lot with the equity markets due to growth expectations. Again, it's primary industrial use for palladium is emissions control on vehicles. So when the stock market turns, it's because the economy has either turned or people think it's going to turn. In that case, you'll probably see the auto sales decline, and when auto sales decline, less new cars and less demand for platinum and palladium in the emissions controls in vehicles. All right, I'm sorry, I'm just looking at this chart and don't know where those divergences went down that high before. But going back to this, kind of digressed for a little bit here. I mentioned it last week. Platinum here had broken out ahead of gold and silver. I said that broke out, ran up, hit that 878.50 resistance, hit it again, pulled back and back tested. Provide an objective long entry there if you didn't get the breakout on the back test. But again, today, as I mentioned, once it took out 978.50, broke out, back tested, and boom, nice leg up. Platinum has a little bit of upside potential here at about 998.62. That's where that next target is. But remember, you have silver at resistance now. And let me go back to gold just real quick. Gold really right now, and at least on this 60-minute chart, you don't have resistance. You had a resistance point here, potential resistance at that previous reaction high, but we already popped above it. And you can see where the crosshairs are. And then you have another reaction high up here. So these metals could continue to move up. Silver could power through that resistance level, and like I said, there should be a little more upside in platinum, but again, not objective when you go back to platinum to buy it after a pretty sharp run right in front of resistance. Better to see it either pull back, come back in, back test that 978.65 level, then go in there. Or if it comes all the way back here, that'd be a really nice entry if everything else confirms at the time, meaning the charts of the other metals, the market, and platinum itself. But look at this, come back here, you have that 978.50 level that broke out of right there, and you have an uptrend line coming in that around the same level if it looked pulled back in like this. So there's a potential setup. But again, to go long just before resistance after a very sharp rip is not objective. Doesn't mean you can't go up, power on through there. It just means not objective, because you're risking a chance that your profit taker step in here, long step in, take profits, or shorts might short it off that level. And it's a pretty big level too, by the way. So yes, I do favor a reaction at or just below there on platinum. And if you don't trade futures, PPLT is the ETF. I don't have a lot that stands out. Well, on this daily chart, what stands out right here, 90. That's a pretty big level there. If it pulled back to 90, held that level, and then you have a primary uptrend line below that, that would entail a little bit deeper pullback, I believe. I don't know if those trend lines align, but to pull back to 90, that'd be about a 3.7% pullback from where we're at. But nice green candle today. And look, here's the thing, and this is why I'm more interested in going long pullbacks to supports or breakouts than I am shorting, because this is in an uptrend right here. It may come back in and test this trend line again. If it does, we'll look at it there, and that might be an objective long entry on platinum. And palladium, again, we'll watch it. New high right now, same thing as before, divergent high right there. I haven't updated this chart. This is a messy looking chart, so kind of ignore everything but the divergent high. And again, breaking out to new highs with that gap up today. No reason to, I don't see a reason to short it. I don't see anything remotely close to a sell signal or any type of reversal, but one to watch. All right, next up. This is crude oil. I saw some negative headlines today, and talking about the impact on the coronavirus, and China, which is now, you could see, carried over to Apple. Apple reporting their revenues are expected to be lower now. They're expected to miss because of disruptions over there in their supply chains and demand. And then the same thing on oil. But I like the charts are still constructive, and I don't see anything in this chart right now to make me pull the trade early. In other words, this is an active trade, an official long trade. We already just hit our first target on Friday, was it? We just barely averted having our stops clip, like was the case on natural gas, and so be it. I shared my thoughts at the time. And what I need to do here is really just to you guys see what happened. When they came in after the breakout and they came in and essentially back tested that low on USO, that just simply extended the divergences. I already had the divergence lines there. I just want to mention. So you had a divergent low here, the basis for the trade with the breakout of the wedge. Another, basically a retest of the recent lows, which also put in a divergent low, and it's been moving higher since. Too early to call this a new uptrend, too early to call it anything more than a dead cat bounce, but again, constructive chart for all the reasons I mentioned before. So I'm leaving that official trade as is as far as the targets and the suggested stop. And what we need to see here is a breakout above 52, we'll call it 52.50, pretty significant level in CL. There's your downtrend line right there, breakout, back test, moving up. And it seems it's crude's basing here. And remember, the basis for that crude long as well was we had pulled back to long-term support. It's not showing here on my daily and weekly charts. We have long-term support on crude oil, USO, crude futures, all that good stuff. And so maybe we're just consolidating above that and going to take another big leg down, or maybe we're going to hold that support and go up. Now we could trade sideways for a while. Either way, whatever we do, that I can't tell you, but what I can say is looks like an objective long entry if it can pop above that 52.50ish level, maybe 52.60, and that should open the door for a move up to that next target there, 55.04, in which case the USO official trade should hit at least T2 on that. And of course, if it goes the other way, don't get married to it. Crude is in a downtrend. This is a catch a falling knife, bottoming trade. And again, as I said on that before, I'm viewing it at the time being for just a quick, more of a tactical trade, bounce trade, but there is potential in the charts. When I look at the longer term charts, give me a clean board here. I know I have one somewhere. There it is. There's that longer term support level at USO. So there's a potential, like I went over that we could have another run up like this, like this, like this, off this level, like this, and something like this. Or boom, we break it down. Stock market will probably have a lot to do with whether we get something like this, or we go on to break this and take another leg down in crude oil. But again, I've done a lot of updates on that, so I don't want to spend much more time. I just want to say it looks good now. But again, going back to kind of what I said on some of the precious metals here, it's the same story. Is it objective to buy crude, go long if you don't have any, or to add to a position? No. And it's simple. You're just right below resistance. Why not just wait? You're not giving up much on your entry price to wait for a breakout above that level. It's going to increase the odds, and we're going to 55. If anything else, the most objective thing to do, not that I want to do it, would be to short here just below resistance with the stop somewhat above for another leg down. But again, because I think the charts are constructive, I don't care to short, and I'm still long crude. And then on a related note, natural gas, we had a recent trade on that one. That one they just did barely clip our stops on the official proxy, which was UGAS. I believe I was using UGAS. I'll usually go with UGAS, sometimes UNG, but divergent low right there, positive divergence at the most recent low. I mean, we had positive divergence here and here. That was a basis for the entry in that last trade. It started to pan out, but then went on to punch down, take out that previous low. That's a little stop raid right there, stop clearing move, and then boom, it's been in an uptrend since. So as I mentioned, the charts were still constructive at the time. What I'm trying to do with the wrong tool is show you, early makings of an uptrend here. As I mentioned this morning, we're at resistance, not only resistance, but a pretty solid one, that 1.954-ish level. You can see numerous reactions. We gap down, we were in a free fall, gap down there, and then boom, lots of reactions on that level. Couldn't get through, and we moved down. Now we're testing it again. So I favor a pullback, and but we may not get that. When natural gas wants to run, it can run. When it wants to fall, it can really fall. It redefines overbought and redefines oversold during these strong trends at times. So unlike certain securities where I can give you pretty high odds that you're going to at least consolidate or pull back on certain resistance levels, on nat gas it could go either way. And so the way it works is if we can punch up much above today's highs, take it out impulsively, that should open the door for a move up here to that 2.096 level. Whether we consolidate first, if you consolidate or pull back, that's a little healthier because it builds up some energy, worse off the near-term overbought conditions. But if we do pull back, that 188, or call it 189 level, that was support right here, or was resistance there. It was resistance. We gapped above it, back tested it. So that's a key level too. So that might offer an objective long entry if we pull back to that level. But again, you may not get that entry or add-on. It probably will run up here. My guess is a little consolidation or pullback is the way I'm leaning on that one. Let's see. In Bitcoin, the chart here, Bitcoin's been in an uptrend. We were in pretty early on that uptrend, caught a good part of it on our Bitcoin trade. Still have some proxy trades like Riot and Overstock and those out there. And it was a clear breakdown. Here's a level, I was highlighting this uptrend line here on the 60-minute chart for a while, and we broke down just, what was that, yesterday or last night or something. There's your wedge pattern. We were diverging at the high, and it started to ignore those divergences for a little while. But again, we gapped down. That would have been probably Sunday night opening right there. It gapped down, Sunday night trading. A little kickback rally. And the way this one will probably play out, it's been, or at times, quite often, it is a flight to safety asset. Not always, but sometimes with the stock market corrects, that could and will likely give a tailwind, help out Bitcoin. But as of now, right now, it's in a precarious technical posture, is what I would say here, because we broke down. And this looks like just a kickback rally. Maybe we come into back test, but again, it's had such a run up. Bitcoin might need a breather. Let me look at GBTC. That was the one we used as our official proxy. We're still above that final target. I don't care to short Bitcoin. And I still have some of those proxy trades, unless they've been stopped out. Like I said, I just got back a little while ago from the dentist. I'm still trying to catch up. I haven't even reviewed all my positions. I wanted to go over this stuff that I covered this morning. There's that trend line. I think I covered that last week. We have a trend line broken, but we also had pretty good support right here at 12.2257. And this may be a case of wagging the dog, because I know a lot of people, A, don't trade futures, especially retail traders, and B, even if you trade them, BRR is a big contract. There used to be another one out there. I forget which one. CBOE has one, and CME, Chicago Merc, has another, or had another one. One of them was temporarily retired or suspended. They may or not. I don't think they ever brought it back. I think that was GBXT, the other contract. That was a smaller contract, but BRR is a big contract. So my point is, it may be a case of the tail wagging dog. Probably a lot of people are putting money into this, because anybody, you can buy one share of this on a discount broker with zero commission, and it'll cost you $13.12. That's so instead of the the hundreds of thousands plus on the one contract of BRR. So my point is here that I see a pretty good support level right now on GBTC, and again, with these ETFs or ETF type proxies like this, closed-end funds, it can be a case of the tail wagging the dog. If the buyers step in here at that 1222 or support, they run up. These guys in turn buy Bitcoin futures or whatever it is they're using to track the price of Bitcoin, and you could get another leg up there to 17. So it's not all over yet for this one. Again, that's why I don't care to short it. You have this pullback to support, but you do have the trend line break both on GBTC as well as Bitcoin futures, as I showed you. So not a bad time to tighten up stops for those of you still in Bitcoin. And then I probably should, since we're on it, talk about the proxy trades. Same thing with Riot. We had our second target there, pulled back. So Riot is at dual support levels right now. It's just trying to cling to, remember that 150 level where the first target was. We're at 149 right now as I talk. So we dip below it briefly, but it's trying to hold that support as well as this trend line support right here. Tighten that trend line up. So there it is. So kind of like Bitcoin, if it goes down much more, it's going to be bearish, and that opens a door for a move maybe all the way back here to 130. But again, Riot will tend to follow Bitcoin. So as of now, can't write this one off yet. It's still an official trade. This is still the final target. And ideally, we'll see stock market correct, money come into Bitcoin, and then maybe Riot will follow up. Maybe not. Remember, Riot's an individual stock. It doesn't hold Bitcoin. It's a blockchain technology company. And then you head over stock.com. Again, a lot of exposure to blockchain and in crypto, and there it is. It needs to really punch above that first target that was hit back here. It's been consolidating since, and the other one was MGI. A little bit more of an indirect play. Finally, nice move in MGI. And that opens the door for this next target up here. Remember, this is an unofficial trade, so it doesn't say T1 equals. That is the actual resistance level I have at 322. If you're in MGI and that's the area you're targeting, you'd probably want to step in and sell a little bit early, maybe around 315 to 318, 316. Why? Because if all eyes are on 322 or 320, the sellers may step in early. Maybe they've already done that. We came pretty darn close today, but probably get, again, it depends largely on what Bitcoin does, probably get another thrust up. But either way, this might be a news event on the company today, because Bitcoin's down and this guy's up 18%. And so I highlighted it back here on the breakout of this wedge. So since the breakout alone of the bearish falling wedge pattern, it's about a 37% gain on MGI so far. So nice little one. And thanks again, props to, I can't remember the username of the member out there that had put this one on my radar when I started highlighting Bitcoin, a couple months back, and those other two proxies as bullish and bullish trade ideas. Somebody shared this one with me, which I do like and still own. Okay, and to wrap this video up, just in no particular order, just some of the other recent trade ideas that I've thrown out there. I'll just update ALMP. This one's not going to move a lot. Those master limited partnership ETFs, the energy sector, midstream MLPs. Really nothing to report today. It's virtually flat, down 0.038. What else? We had Joe's unofficial trade. I mentioned that recently. We'll pull back today. Let's look at coffee futures. Let me grab that chart. And Okay, so on coffee futures, we ran up here. We hit our 111.99 target right there with a brief momentum fueled overshoot. Remember, we had almost a vertical run. Very strong move leading up into there. Nice run since the breakout. Better than what is that? 11, 12. Yeah, I don't know, 11, 12% or so since the breakout there. But nothing goes up forever. Coffee runs strong and did, again, a little momentum fueled overshoot there. Let's come back in, ideally, and it would offer an objective entry with a stop somewhat below that 105.62 former previous target, which was already taken out. Pull back to that level, at or above it. Could open the door for the next leg up here to that other target of 116.15. And again, Joe is an ETN, does its best job, and it's, oops, I need to change that. I gotta go to this charting platform here, 60-minute chart, and you can see there on Joe, it looks like I had a target there to unofficial, but 35.51, and it looks like it hit a high of right there. 35.38 is that, yeah, close enough, and that's why you want to sell a little early. But look at that, it's pulled back to support right now, gap support, so we could hold from here, ideally. And again, futures didn't show that, but this ETN does. It's a case of the tail wagging the dog, possibly, although I think my guess is there's more money in coffee futures than in Joe. This is kind of a niche ETN. But either way, we're at support now, and the charts still look constructive. So like I said, it's objective to go long here, pull back. If it comes all the way to 32.59, still objective. Really don't want to see that, ideally, because we're very overbought. So the pullback is healthy, it's normal. But ideally, I'd like to see this pullback contained here and not here. But if it gets there, that could do the trick. Otherwise, like I said, Joe wants to run, it can really run. This correction is certainly enough to give it the energy to punch on up to that next level if it wants to. So we'll see. CWH, Camping World, so far holding that trend line support. Remember, we pulled back here, but we had $15 price support just below the uptrend line, held like a champ 1-2 days, and then bounced off that $15, and it's been hugging the trend line since. So still an official trade. Again, would it be something I'd add here? No, because we hit the second target, which was close to the third, but still an active trade, and it pays us a dividend too. So even if it takes a while, as long as we're not stopped out, I remember I raised a stop on it from the original stop. So even if it meanders around for a while before it gets there, I don't know when the next one's coming up, but well, we already had a dividend go. It went ex-dividend, paid out a dividend to shareholders, a record back in December 16th. So we should have one coming up here in about mid-March on that one. All right, next one up would be NEOS. I think that's still active. Yeah, looks good. I can't remember if that's still an active trade or previous trade there. Already went up and hit that first target almost to the penny there. We had T1 at 194, hit a high of 198. I had the line set just below. I had my line. You can see the pop-up box at 197. That was all the way back from here and already hit that, pulled back, and it's kind of, this is a specialty and generic drug maker. Needs to hold above this trend line ideally. And it also needs to punch up above that level to really get going. I think if it can pop above $2, it can run up to that other target there. And again, I think that one may not be active. It's still showing under the active trade list. I've just been very, very bad at updating those. What else was there? I already covered Riot. Oh, what I wanted, sugar was up today. That one, mentioned as an unofficial pullback short trade, and it had a big pop up today. Let's look at the futures, SB. Let's make sure this is updated there. Little kickback rally, but it still looks to me, I still favor a move down to this 0.1443 slash uptrend line. They come in, they intersect together. I just moved that level. No, still, we'll leave it there. You can see that's my pullback target zone. I still think that'll get hit. So I think we'll get another jog down here in sugar futures soon, and SGG, the ETF. In fact, let's look at cane. Cane is another one. ETN, I should say, to be technically correct. Most of these agricultural commodities, you have ETNs, and they will kick out of K1s. Something to be aware of. All right, there's the uptrend line. So it's still above the uptrend line support, but again, it hit a pretty big resistance here the other day, and I think it's probably going to need a little more consolidation or downside before it takes out that recent high, although that would be bullish. All right, and then finally TVIX. Yes, let's not forget TVIX, hanging on by a thread so far. Our stop is 37.60, and so far we've managed to just barely avert that stop being hit. But again, it's probably going to depend on the market. If the market can get some more downside after these breakdowns that I just highlighted in the beginning of the video, we get another leg down. More importantly, we break the support, which is pretty much today's lows in QQQ, then that should bode well for this trade. If you want to give it a little room, that's up to you. Kind of wait and see. But if the stock market foils these breakdowns recently and takes out these divergences and powers on up from here, we'll probably have this one stopped out. I am not going to modify the stop. Could change it to a stop on a daily close. Let's just leave it as is for now. And again, it's suggestion, that's all. You can use that stop, any other stop you want. Wait for a little more evidence in the market. That could come sometimes if you wait. What happens is a market gaps down big and then TVIX gaps way up and you kind of miss an objective entry. But again, I just wanted to update it. Not my favorite right now. Would I add if I didn't have a position? Maybe here because of the breakdowns in the broad market. But so far as I'm doing the video, just QQQ just won't give up the ghost. It needs to take out that this support level. And that's where I'd add. If we can break that out, big red candle down through there, yes, TVIX should pop if that happens, because that would open the door down to 230, 33, and then ultimately this level here. And I can almost assure you that would be a nice lift in the VIX and TVIX if we got that. I think that's it, guys. That's not all inclusive, but most of the things I'm watching and trading right now. And again, I'll try to catch up to any questions and comments as soon as possible. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.